All right. So welcome to Game Plan Sunday, Super Bowl Sunday, February 7, 2021. As we take a look at the markets here today and let you guys get to your game and your party and the festivities. But basically, taking a look at the pre-markets here ahead of game time, the markets are looking pretty strong right now. Slightly strong, not too much, but we can see the NASDAQ is up 31 points. The Russell's up 9. The ES is up 9. So everything is actually looking pretty, cool, calm, and copacetic right now. But taking a look at last week, what happened last week? Well, the same thing. The markets were looking great last week. So the Russell was up over 7.70% last week. The NASDAQ was up 6%. The S&P 500 was up 4.65%. And the Dow Jones was up 3.89%. And so we can take a look here at the theme here. The overall theme for basically the markets and everything is vaccines roll out, economy opens up, healthy economy. That's what everybody's banking on. This is vaccine rollout, a lot of confidence in this vaccine stuff, but also is the stimulus, the Biden stimulus bill, 1.9 trillion stimulus package. Which the House just, basically passed it last week and waiting for the Senate to get through. And it's going to go through. So the markets is already pricing this in advance. So everything's actually looking positive. For the most part, we got a lot of the risks that we were aware of at the time out of the way. In particular, Trump is out the way now. In fact, his impeachment trials is coming up this week. Also, I believe starting on Tuesday. But I'm not too sure if that's really going to impact the market since he's out of the way now. So just actually go to the site and let's actually pinpoint a couple of key things. We was looking at some economic data here that came out last week. We had the PMI manufacturing numbers. They came out and they were positive also. They just said here, supplier factory capacity is well utilized, increased demand. Also, we have business remains strong, very strong demand, limitations in supply to meet increased demand. Labor continues to be one of our largest challenges. Business demand is going way past pre-COVID-19 levels. Supply base is struggling to keep up with demand. 2021 is expected to bring growth at a 7% or even greater pace. And this is in the electrical equipment space. Strong orders for plastic components in auto, electrical, and other sectors. Struggling with a shortage of available labor. So basically, the overall theme is that demand is there, it's pumping, but supply is an issue. We're getting the supply to actually meet the demands. That is actually a major issue right now for the market. So this right here, the manufacturing PMI overall is bullish because, again, demand is there. So demand, that's good, but supply chains, that's a risk that we must keep in mind. Also, we had the PMI service numbers that came out. Here we go. They said labor is still the major impediment to the business. Labor, right? They need workers. Seasonal reduction of activity due to the winter break from campus activity. Let's see. Positive outlook. The copper shortage is slowing deliveries of key network equipment. So you need those first order goods so that these producers can make things. And they're saying they're having shortages affected by limiting staff due to COVID-19 restrictions. So the government also limiting, with the lockdowns, is causing people to have a small amount of employees. So they're actually saying they're having labor shortages. We're having a lot of shortages here, but demand hasn't gone anywhere. Demand is actually picking up. Post-holiday spending is up. Business outlook for 2021 looks better. Business outlook for 2021 is positive. Good start to the year. Okay, so this is the service sector. We're hearing it directly from them. Same thing as the manufacturing sector. Demand is there, but you have to be able to open up to get the supply to meet the demand. So the government's response is basically to try to get these vaccines out so that people can have this mental security that they can go out to restaurants and businesses and stuff like that, spending again. So that's what this whole thing is resting on. The illusion of this vaccine stuff, being able to make people feel safe again. You remember, it's all about psychology at the end of the day. We have productivity and cost numbers that came out also. And this right here is just telling you that non-farm business sector labor productivity decreased 4.8% in the fourth quarter of 2020. So productivity is down. And you got to remember, producers, you got to have production because people are consuming. And you can't consume what you don't produce. And whatever you can't produce, you have to actually import. So that this is all valid major things. Also, if you notice here, they say that unit labor costs in the non-farm business sector increased at an annual rate of 6.8% in the fourth quarter. So labor is going up. That's inflationary. So we have a lot of inflationary pressures in the markets here. Also, if you take a look at the bonds here, the yield curve, this is on the website. Actually, I built this. It's actually on the website. You guys can check it out. But if you take a look here, and we go before, well, right when the pandemic kicked off, we can see that we had the yields were right here. And look at where they are now. They have just basically slightly uptick. It's at 1.19. So before, this is the 10-year yields. It was at 1.18, okay, before, and now at 1.19. And you can see the spread in these yields, okay? And this is, if you know about the bond markets, look at the time in the markets class that we have, which is actually, once you already had the class, it's free. But basically, it teaches you about the bond markets, how it works, how the bond market is like the oracle, what they're pricing in. And then the Feds is controlling this from down here, and they're keeping that suppressed. And you can see how low it's going. It's going even lower down here to, back to these levels, basically. And so this is basically, it has lots of implications. I'll go from one of the economists, Tom here. He says, historically, a steepening yield curve going up is a good sign for both the economy and stock markets in the coming months and quarters. Okay, so that's the way, you want to see it up. But it also is an early warning sign that the clock is ticking on how long the Fed will remain on hold or easy before beginning to hike rates and tighten financial conditions to combat the threat of runaway inflation. So there's a risk of inflation just getting beyond the Fed's control. So they're playing a dangerous game right now. But the markets basically have this confidence that they can actually keep this thing tame. And so these are the different things that we're learning from looking at these indicators of what could possibly happen. And we're seeing a lot of inflationary pressures in the markets right now. But because you have some deflationary things like unemployment being really low, it's kind of like a balancing kind of mechanism where we're seeing the economy basically stagnating because, they're trying to, boost it up, but then you have productivity and everything is lower. And so maybe it just doesn't do anything. So whatever the Feds is doing, printing money and stuff like that, if it can't stimulate the economy, then it's stagnating. And so these are definitely all the signs for a depression, meaning that nothing that they can do will be able to stimulate the economy. So they're actually having a lot of different things they're trying to get to work together to try to get this thing together, which I just mentioned earlier, the vaccines, the stimulus that's supposed to roll out here shortly. In fact, they're actually working at light speed times to try to get this stimulus passed out by the end of February. And Biden is basically saying that $1,400 checks is what he's trying to get out to everybody. But they're debating about, giving people that even work, people that work, should they even get a stimulus? Shouldn't it just go to people who are not? And then how much the stimulus should be? People want it to be lower. Anyway, so it's a lot of debates going on with that. Anything that derails that plan from $1,400 checks, less stimulus, I think that the markets wouldn't be happy about that. So, Biden, he already has it, he already says that that's what it's going to be. So I have the expectation that that's what it's going to be. All right. As far as the job numbers, we had the non-farm numbers, non-farm employment numbers came, and it rose about 49,000. But you have to understand that Wallstreet had an expectation of 50,000 jobs. We only got 49,000. So it was, pretty much almost on consensus there. But what was really bad is that the last month numbers were actually revised down lower than they previously were to 227,000 jobs lost, basically. So this is really bad information, really bad economics for the markets. But for Wall Street nowadays, bad news is good news because, this bad news here should basically influence, these congressmen to expedite this stimulus process because they say, hey, it's a lot of jobs. It's just, they're just done. Now, if you dive into a lot of this here, the numbers, which I have all here so you guys can check it out on your own time, but just to give you the brief and the skinny, is that one of the issues is that permanent unemployment is actually trending higher. And that's a bad sign for the economy, because we're talking about people that are, those jobs are never coming back. These people are not even looking, and, they're not even looking for a job anymore. So although there could be jobs out there, are these the jobs that people want? You got a lot of people that's displaced and they're just getting jobs because they got to survive. But are the jobs even paying enough money that they were, probably not paying enough according to what they were getting paid before in comparison to now, but they're trying to survive. So you have a very tight labor market where it's hard for people who lost their jobs to get a new job, especially in the field that they were previously working in. So you're having a shift of economy. People have to pick up new skills. How long would it take for this to even take place? It's definitely not happening right now in real time. So the timing of that, this is another risk factor here. All right. And I'll give you guys straight up info from these economists here. It's a short brief here on all of these economists, what their thoughts on this is. Okay. This economist here says that as the economy passed the worst of the third COVID wave and vaccine optimism took hold, the labor market displayed a faint heartbeat. While favorable seasonal factors helped lift the monthly jobs count, the January gain nonetheless represented little progress toward recovery. So it really didn't represent nothing. Seasonal things like Christmas, people supposed to spend money. Thanksgiving, people supposed to spend money. So those are the themes that he's talking about. And basically, the seasonal thing, you got to understand with flu and stuff like that. In the winter seasons, you normally have high cases anyway. So there's no real evidence that it's even COVID, to be honest with you. But these upper respiratory viruses, they spike like this in these seasons anyway. So as we get into the summer months, just on a natural basis of how these viruses work, they normally just dissipate anyway. And so that should help out the markets coming, in the near future. But this is what he says. He says, we foresee increased vaccinations, stable household finances. This is what they foresee. Okay. This guy here, Robert Frick, he says that he's at the Navy Federal Credit Union. Though we gained jobs in January after a December loss, this is not a we have turned the corner report. Okay. We especially shouldn't take solace that the unemployment rate fell dramatically, given that mainly because more Americans dropped out of the labor force. I just told you guys about people dropping out of labor force. They're not counted in these numbers. Also, the number of long-term unemployed rose, and those Americans will find a tougher time re-entering the workforce, which also will slow GDP growth productivity. We showed you the productivity numbers earlier. This is not good. While this report was mixed, the effects of December stimulus and decreases in COVID-19 deaths and cases point to stronger increases this month and for the future. So he's talking about, again, blaming it back on COVID situations, right? Jefferies economist Thomas Simons, the bottom line on today's job report is that it was full of noise and light on signal. What we do know is that the labor market stalled out in recent months on the back of fading fiscal stimulus and COVID-related business closures. Both headwinds are now behind us and will turn into significant tailwinds for employment in February. We estimate the California restaurants industry alone lost roughly 700,000 jobs in the past 2 months. I mean, this is California restaurant industry alone, most of which should reverse by February. Should is the key word. In addition, the PPP loan program, which was reinstated in January, should also provide support for small business employment. All right. And then we have BlackRock's Chief Investment Officer says, we believe that the economy will progress to an unemployment rate that should end 2021 in the high negative 4% range, absent another unexpected shock to the economy, and should move into the low 4% region sometimes in 2022. So best case scenario, he's saying the recovery, we get to about negative 4% range. If no other risk that they haven't calculated shows up, but they don't know. That's the risk is the unknown. Nobody knows. But there you go. You hear straight from these guys here. And also, this right here is about the 1.9 trillion stimulus. It's right here on the site for you guys about the stimulus package that's coming out. So that's what the hopes of the economy coming back is resting on, those themes there. Looking into the future here, we got the earnings coming up this week. Some of the main themes that we're looking at here, we got, it's kind of light on Monday. You got Chegg, of course, but nobody's really checking for those. But Tuesday, people are going to be checking for like the Twitter, Lyft. You have Avaya. You have on Wednesday, GM, Uber, Under Armour. Then Thursday, you have Pepsi. You have Disney. You got Cloudflare. LabCorp, Kellogg's, okay. And Friday, a little more light. You have Newell, Dominion Energy. But those are the earnings themes coming up this week, so keep those on your radar. And let's actually go back to the charts here. Speaking of the Super Bowl, speaking of the Super Bowl coming into this week again, I expect things to be a little bullish because of, again, what we're just talking about, stimulus being passed. Bad news is good news these days. And just take a look at, we had Jeff Bezos that actually stepped down from Amazon. That was an interesting piece of juicy news there, which is interesting. I told you guys last time I watched this movie Dissident, and it's an interesting movie because Jeff Bezos is in the movie, basically, how the Saudi hacked his phone and got information. And I wonder if they got this guy by the balls. I don't really know, but apparently they supposed to have, I guess, leaked this information about this affair that he has because they had the information from his phone. But I don't know why he's stepping down, after so much success, but who knows? The investors at Amazon seems to be satisfied with the new guy. They're basically saying that he's a clone of Jeff Bezos. He's been there from the beginning. So people expect for things to continue as they are, but you never know. People like Tim Cook at Apple. Steve Jobs was the innovator. Tim Cook, what has he innovated? He hasn't really innovated nothing, but he's good at, squeezing out the value of what, Steve Jobs laid out at the time. So we yet to see, but that's something that investors need to pay attention to. Also, the GameStop situation. Okay, we had Yellen that came out, and the regulators, they're coming in to try to fix this inefficiency in the markets that the Wallstreet bet guys were able to exploit and run the hedge fund guys into the ground. But those are the prior 2 weeks before last week. Last week, obviously, you see that Wall Street got their face back and smashed out GameStop. As you can see, this thing has lost, pretty much, 80-something% of its value, almost 90% of its value there from that steep drop. The candlestick we have forming here that I got is a reversal candle here. So it looked like it's trying to find support around this $45 range here, somewhere around here on GameStop. So but I just thought we covered because it's still in the headlines and people want to know about it. But if you're the guy that was listening to Mark Cuban and you was talking about, holding the door, yes, you got marked. You were taking losses that you cannot sustain. So, you're pretty much forced to close those things out. If you're holding this thing on and expecting to come back up here, you might as well just jump because that's not happening. All right. So you might as well take your losses like a man. In trading, you got to learn how to take a loss. That's what's going to come with the game. It's natural. It's normal. Also, we have the because of the Super Bowl thing, I think the sports betting names actually was running up into the Super Bowl. So you have like names like Penn National Gaming, nice big candlestick up there, a nice skip hop up to about 130 almost, and then you have let's see what else we have. LVS, Las Vegas, Sands Corp. This is, these are the sports betting companies, all right? So be interesting to see how these play out this week after the Super Bowl. But I believe that the move is already priced in here. So DraftKings, that's a sports gambling favorite. It's got a doji there. That's kind of reversal sign. So interesting to see how that plays out with the Super Bowl. And what else we got here on the radar? Gold and silver got smacked up, right? So if you take a look at gold, well, silver's still in a great position, but gold got smacked up after the run up in silver, and this got smacked up. But we got some reversal candles that's like it's trying to find its flooring right down here in this zone, in this area, starting to reverse up, but it's not in a good position. It's not looking good. All right, ATVI. I was looking at this is Activision from the gaming stocks. Now this is actually on the sports betting stock list also, and so it's interesting to see how that pops up like this, and it's actually beyond my levels here. So on Activision, let me actually go in and put some higher levels in here that I can capture, show you how we do this with the Fibonacci magic to gauge levels beyond those moves. So we can see levels up in that range if this continues. EA, again, these game stocks they're having their earnings right now. EA got smacked up after their earnings report. Their stock price dropped and fell, but Activision went up. And I believe we have Take-Two Interactive that's coming up this week on the 8th, which is tomorrow. So it's another gaming stock company. It's got a nice squeeze on it. So that's going to be interesting to watch this week as well. Oil markets, let's take a look at oil here, because oil, as we was talking about some of the themes of the economy, we talked about the bond markets, we talked about, what is expected here in the future, what the markets are pricing in. Well, oil is inflationary, okay? When these prices go up, goods go up, cost of living, everything else goes up. And we're seeing oil go up to, its highest levels since the pandemic crash. It's actually above those levels back in March, February. The price is above that. I have Goldman Sachs summer target of 65. Well, I actually believe that we'll blow through these $65 targets here this spring before we get to the summer. And I have reason to believe that we should be able to get up to about $80 here, $80 on oil by the summertime. So this is my forecast on oil, is that we blow through Goldman Sachs before summer, we get to 80. And even before the summer is over, we could see $100 oil prices. And this wouldn't be good on equities or the markets. This would definitely force the Fed's hand to raise those rates and pop this bubble that is happening right now. So this is all interesting. So definitely keep your eyes on oil. In fact, there's lots of money to be made in oil this past week. You could take a look at the names, the XOMs. All right. It's got a squeeze. It's still on play. EOG. Okay, that's a nice bounce off the 50 moving average. Marathon Petroleum. Okay, those are some of the names that you want to pay attention to in this space. Chevron, I think they actually missed their earnings actually, but they're still looking pretty good. Hess. Okay, so these are the oil companies, oil names, if you actually want to ride that wave. All right, so that's pretty much all that I have for as that goes. Another thing, the Super Bowl thing, sports, names, they make money, because people are into the sports stuff, and who's making those brands and products? Well, Nike, obviously. So Nike had a nice run, and the play in Nike is still on. So the play in Nike, did a swing from that high to the 100 moving day average, and the bounce off of that should get us to about $160. All right, but we have to see how this plays out. Two of the names that we have, again, the trend here, everything is pointing up, and you have Nike there, and then you also have Under Armour, and I believe they have earnings coming up this week also. But these guys, they make a lot of that sports stuff, and we can see the moves at Under Armour. It look like it's already coming in before the Super Bowl hits, right, and before their earnings. But we'll see how it all looks after the Super Bowl here. But these may be some interesting themes, sports themes coming into this week. So with that being said, I'm going to go ahead and close out the session, let you guys enjoy your Super Bowl session, and we'll catch up in the chat room on the website. If you haven't subscribed, make sure that you hit that like button, subscribe to the YouTube channel, and also create your profile on our website at wallstreetjackboyz.com. You guys have a great weekend. Peace.